A bond crash can actually be good for your retirement. Before you manifest the crash, let me explain. Rising rates do more than depress bond prices. They also mean higher future returns from bonds. Of course, it depends on how long you can hang on before spending that bond money. If you don't really need to liquidate for another 7 to 10 years, and an average bond portfolio, then the recovery will most likely compensate for whatever losses you are incurring now. Keep your eyes on the real interest rate. That's the stated coupon interest minus expected inflation. When real interest rates go up, as it is doing this year, the bonds you bought from last year is devalued. But when things go better, that means inflation is controlled. Interest rates start going down. Then the bonds return and value will go up. Interest rates will most likely continue to go up for several more months as an attempt of the government to control demand and stop choking producers and manufacturers. This is not the first time this has happened. Back in 0809, the government also decided to print trillions of dollars in an attempt to encourage economic activity. Bonds dropped in value, but they more than made up for it 10 years later when the bonds matured and the economy was better. At the start of this year, the real interest rate on 10-year Treasury bonds was minus 1%. Conservative investors were locking in. Unfortunately, as the Fed starts correcting the economy, the value of investments is the first to suffer. On your screen right now is a graph that shows the long-term effect of sustained high interest rates. Right now, the value of diversified high-grade bond portfolio is down 12%. However, the deeper it falls, the higher the climb. The second graph looks at the effect of this year's rate move on a collection of long-term treasury bonds. The immediate damage there is greater and the recovery time more than twice as long. I know the market is discouraging right now, but if you have the tolerance, just continue holding your assets and wait for an epic recovery. From Tesla to JP Morgan, everyone is saying recession is sure to come. So if you have any more tips on how to invest or simply survive the recession, at least financially, let me know in the comment section below. This has been Anna Kate for Noble Gold Investments. Make sure to click on the notification bell, like, and subscribe to this channel if you want to receive all our latest news and updates.